If you've ever stared at a stock chart and felt like you were just looking at pure, chaotic noise, believe me, you are not alone. But what if I told you those red and green bars aren't random at all? They're actually speaking to you. In today's explainer, we are going to completely demystify the seemingly chaotic movement of stock charts. We're going to decode the secret language of the market, taking what looks like abstract math and translating it into a very clear story of force, of moods, and ultimately, human psychology. So here is how we're going to break this down. We'll start with the anatomy of force, then move into identifying single, double, and triple candlestick patterns to really gauge market moods, and finally, we'll piece all of that together so you can read the full story.
All right, part one, the anatomy of force, understanding who is actually in control. To read any language, you have to know the alphabet first, right? So we are starting right at the foundation of how market movement is recorded.
This is the crucial concept. The market is essentially a highly stressful, never-ending tug of war. It's a constant, vicious battle of force between the bulls, who are the buyers pushing for higher prices, and the bears, the sellers, who are demanding lower ones. Every single mark you see on a stock chart, that's just a receipt showing exactly who won that battle during a specific block of time.
And those battles leave behind a very specific physical footprint called the candlestick. The thick colored part, which we call the body, shows you the real estate between the opening and closing price. But the really interesting parts are those thin lines extending above and below. We call those the wicks, or shadows. They reveal the extreme highs and lows of the skirmish. It shows you exactly how far one side managed to push the price before the other side stepped in and fought back. The color of that body tells you who won the session. When the close is higher than the open, the body is green. That's bullish intent right there, showing that buyers really flex their strength. Conversely, if the close is lower than the open, it's red. That signals bearish intent, meaning the sellers absolutely took control and drove the price down.
Moving right along to part two, single candles and hidden strength. Once you understand the basic footprint, you start noticing that these footprints have actual personalities, distinct moods conveyed by just a single candlestick.
The best way to grasp this is through personification. It tells a very human story of hidden strength. Think of it like this. A hammer pattern is basically the visual equivalent of the market taking a super nasty fall, tripping right over its own feet, but then suddenly leaping right back up with a giant grin.
It is such a powerful narrative. You'll see a tiny body, but this incredibly long lower wick. And that wick is the ultimate proof that the bears aggressively tried to push the price down, but they completely failed. The bulls stepped in, violently rallied the price all the way back up, and managed to close near the open. Finding one of these after a long downtrend is an absolute massive sign of seller exhaustion.
On the exact opposite end, we have the shooting star. Think of this one as a huge bearish exclamation point. You get this tiny body with a massive upper shadow. The buyers thought they were in total control, squeezing the price way, way up, but then boom, the sellers forcefully slam the price right back down before the period could even close. It is a total, brutal rejection of higher prices.
Okay, part three, double candles and the engulfing pattern. Single candles are great, but the market language gets way more complex when you combine two footprints to create actual words that indicate major shifts in power.
The most powerful of these two candle words is definitely the engulfing pattern. If the hammer is someone bouncing back from a fall, the engulfing pattern is literally like a giant stepping right over a smaller person, completely swallowing up all of their progress from the previous day. It represents total, undeniable domination by one side of the market. There are two flavors here. You've got the bullish engulfing, where a tiny red candle from yesterday gets completely consumed by today's massive green body. Then you have the bearish engulfing, which is the exact opposite, a small green candle entirely overshadowed by a massive red drop. That second bar's length just eats the previous one alive. It's incredibly definitive. It's a hard, violent shift in market sentiment.
And let me tell you, spotting this out in the wild is incredibly powerful. When you see a downtrend suddenly end with a red candle being totally swallowed by a massive green candle, it instantly tells you the bears just lost. The bulls have violently taken over, and as a trader, it's a huge neon sign saying it might be time to line yourself with the new dominant force.
Let's look at part four, triple candles and changing minds. We've seen sudden shifts, but now we're examining what happens when the market forms even larger, more complex words using 3 consecutive candles. Think about it like a speeding train. It takes serious momentum and a ton of effort to stop a train and send it fully in the opposite direction.
Reversing a strong market trend works the exact same way, and 3-candle patterns map out that transition beautifully, step by step. This dynamic is perfectly captured in the morning star pattern. It is literally a 3-part harmony of a reversal. Step 1, you have a large, bearish red candle. Sellers are fully in control. Step 2, a small, super indecisive middle candle. The battle stalls out, and neither side can make headway. Then finally, step 3, a massive green candle surges upward. That confirms the buyers just won the standoff, and the trend is officially moving in the other direction.
Alternatively, you get patterns that signify pure, undeniable continuation. The 3 white soldiers pattern, which on modern charts is usually just 3 big green candles, shows 3 consecutive bullish sessions, each closing progressively higher than the last. There's absolutely zero indecision here. It reflects sustained, powerful buying momentum, telling us a strong new uptrend has just been born.
Finally, part 5, reading the market's story. Let's put all these letters and words together. We've got the vocabulary down, but to actually understand the market, you have to read the overarching sentences. And that means understanding that context is everything.
Because here is the ultimate truth of technical analysis. These individual shapes, the hammers, the engulfing bars, they literally only have meaning in context. A hammer candle floating in the middle of nowhere doesn't actually mean much, but a hammer candle forming right at a major historical line of support? Oh, that is a story. Candlestick analysis isn't magic. It is just a highly effective pattern recognition system designed to anticipate future behavior.
When you finally zoom out, you see how these micro single-candle moods stack up to create massive macro chart patterns. Take the triple top, for instance. You've got 3 distinct peaks where the price tried desperately to rise and just failed. That is essentially a massive warning sign built out of hundreds of individual candles. It signals an intense zone of resistance where buyers have exhausted themselves, heavily hinting that a massive drop is likely right around the corner. Which brings us to our final thought for this explainer. The really big institutions, what we call the smart money, they use massive volume to drive these charts. They will actively push prices down specifically to trigger panic, creating liquidity for their own massive orders before reversing the trend on everyone else. But here's the thing, they cannot hide their footprints. By mastering this visual language of force, moods, and context, you stop guessing and you start reading. The alphabet is right there in front of you. So, are you finally ready to read the story the market is trying to tell you?